Given the recent market events, you may be wondering whether you should make changes on your investment portfolio. It is considered to be one of the main concerns, if not the main concern of an investor or the investors. If you want to invest in the right financial advisor, a good place to start with is to know the type of investments and strategies that suits you best, especially in making long-term decisions. But before making a decision in picking a financial advisor, you should consider these questions to ask yourself.
Do you want to live without any liquidity issues in the long run? Would you want someone to provide financial services for you to make money? Are you planning to invest with lower risk but higher returns? Do you find yourself getting excited about gains but anxious about losses?
Do you want to have an assured safe investment? Are you planning to do an investment in the long term? Do you want to execute ideas, trades in the market on behalf of financial advisors without the risk of being scammed or fraud? Do you want to be financially stable before retirement?
We've got you covered.
G&J Investments is a registered and authorized discretionary financial service provider that offers integrated financial solutions to both the business owner and the private client. We have a phenomenal team that dedicates themselves to first, serve clients with honest, competent, and professional advice. Secondly, is to act in the best interest of the clients. Third, is to build valued long-term relationships with each and every client. And lastly, is to provide exceptional service and loyalty. Our professional team manages each client's portfolio with due skills and diligence. We pride ourselves on being at the forefront of our industry and continuously pioneer for new solutions to add more values for our clients. Our clients are our greatest assets, and therefore, we believe that they deserve excellent service and advice at all times. To guide you and be familiar with which type of investor you are, here is a brief explanation of each risk profile.
If you are a conservative investor, you are predominantly a risk-averse, focuses on portfolio stability and preservation of the capital.
If you are a moderate investor, you value a moderate level of risk, emphasis on striking a balance between your portfolio stability and capital appreciation.
If you are an aggressive investor, you are more exposed to risk. Get high returns for bigger risks. Should actively look at the stocks aggressive investors invest in. Focuses on capital appreciation instead of creating stream of income or a financially safety net.
Have you figured out which type of investor are you? So assuming that you are the client under moderate to aggressive type of investor, is single in status, in mid-30s of age, and you want to invest your 500 million pesos for primary emphasis on achieving portfolio appreciation for 5 to 10 years. Willing to assume a high level of portfolio volatility and risk of principal loss, we have prepared a sample investment portfolio for you. We, your portfolio managers, allocated 60% of your initial investments to stocks amounting to 250 million pesos, 30% on bonds amounting to 150 million pesos, and 10% on money market funds amounting to 100 million pesos.
All assets allocated for stocks will be invested in a blue chip company. These are the top 30 financially sound corporations in the PSCI that can have the ability to perform well despite good and bad times. They influence the movement of PSEI so that in case the price is still at par with the PSEI, given its stability in the long run. These sticks are great in the time frame of 5 to 10 years.
Learning from the past experience from the 2008 crisis, the stock market has crashed and there has been a severe, great decline in the stock prices. And after 10 years, the market had surged. During the pandemic, it has also caused a decline in the stock market, and it is also expected to surge in the future, just like what happened in the 2008 crisis.
We allocated heavily on 3 sectors that are way higher compared to the PSEI. These are the services, holding firms, and industrial sector. The services sector had gained the highest allocation because it has the most gap from the PSEI with 12.25% higher.
The industrial sector has high allocation because food businesses are essential to people. Households also consume more kilowatts per hour, and manufacturing companies that creates foods and services as of today are doubling their work for food stock during the pandemic.
Financial sector was down because banks were also heavily affected during the pandemic. Some banks were forced to close while others only had 4 working days per week. Their liquidity was also down, affecting the banks.
The mining industry has low allocation because usually it has drastic changes in stocks. The said industry is going under recovery as of today, but it is sensitive against government laws since it affects nature and cutting down trees.
Meanwhile, the service industry has high in allocation due to its high demand in its technology of internet services. Food delivery supermarkets was also essential in today's lives. Delivering of goods is also an important part during the pandemic. The allocation for the holding sector was also high.
Holding firms like the San Miguel Corporation, SM Investment, and Pure Gold Price Club Incorporation have a high source of allocation since there are big companies that people need. Many investors invest in their company to gain more money and increase their net worth.
Bonds can help offset exposure to more volatile stock holdings. It can diversify its maturities and coupon rates. If an investor has a financial goal, it might increase his or her bonds holdings due to the reduced risk of holding bonds that can catch the attention of investors. Bonds are typically less risky to invest than stocks because bonds prices have historically been more stable and because bond issues promise to repay the debt to the bondholder at maturity.
For money market funds, money market tends to be regarded as the least risky compared to bonds and stocks. This is because of the short maturity. Risk is reduced because there is a shorter length of time these debts are expected to be paid off. A small portion of investment is allocated to the money market funds to hedge against investment risk. In this way, it can offset any adverse risk of any adverse price movements.
Expected return on investment is projected to gain respective ROI percentages per asset class based on the funds with straight fund investment. However, tranches will be utilized to the fund in order to hedge risk as well as maintain a highly liquidated portfolio that can have withdrawals annually.
Tranching is measured by dividing 8 equal parts, which represents 8 quarters for the next 5 to 10 years of investment. This strategy is to hedge the risk as well as maintaining a liquid portfolio anytime that the investor decides to withdraw. Return on investment is computed by using compounded annual growth rate or known as CAGR. CAGR is based on the behavior of the market. It is the market average compounded yearly to determine the interest benchmark for the financial instruments.
The expected return on investment in stocks is determined by the compound annual growth rate at 12%, expecting a gain of the 60% allocated in stocks from the initial investment of 250 million to 776 million 462,052.10 in 10 years.
A 3.38% compounded annual growth rate in bonds is expecting a return of 209,149,359 in 10 years from its initial investment of 30% allocated asset amounted to 150 million.
So in money market funds, a 10% allocated asset of 100 million pesos of about initial investment that is expecting an earnings of 2.25% in compounded annual growth rate and about 124,920,342 pesos growth in 10 years.
In G&J Investment, we are committed to help you achieve your investment goals by providing you the right strategies to meet your needs with our investments. We will provide you the right quality of financial services with our utmost effort to meet your goals and objectives. We are different from other companies because not only we provide the right financial services with quality and quantity, but also our service charges are affordable for an investor to take part in the trade market with high investment returns for you, for your future.
G&J Investments,
Preparing you for
Better future.